demystify, learn. BQ Learning. Only on Bloomberg Quint.
Hello and welcome. This is the Market Wrap. I am Agam Vakil. The benchmark indices have extended their losses today, with both the Nifty and the Sensex looking at sharp cuts. In fact, the Nifty losing out by as much as 80 points. But I'm going to start off with the gainers in today's day of trade. And we have seen some strength coming in as State Bank of India. That's up 2.4%. It's followed by BPCL up 2%. Coal India and TCS also lend in strength. But what's bearing down on the indices? Well, the pharmaceutical stocks, with Sun Pharma declining around 4.5%. It's the same for Dr. Reddy's. More weakness coming in UPL, Yes Bank and Z Entertainment as well. How does it stack up for the broader markets? The Nifty 500, well, not too well, considering its advanced decline ratio now currently stands at around 1 gainer for 4 losers. What are these losers? We have Kitex Garments ending at day's lows, down 20%. That's followed by JP Associates, also down 18%. Reliance Communication now on its downward trajectory. Nitke Miles also losing out 11%. On the gaining end, we do have Sheela Foam reacting to its strong earnings, up 12%. DB Corp up 10%, and Balrampur Chini also advancing by as much as 7%. But what do these cues mean for the markets, and what can we expect going forth? To get in some perspective, we have Neeraj Shah joining us. Neeraj, what have you made of all these moves when it comes to our own Indian
something
equities?
that both of us were talking about on Countdown, Agam. I think that's pretty much it, right? Difficult to figure out or pull out a silver lining out of the trade, at least that's happened today. So, and Thursday session, when the market breadth improved, everybody thought, or a lot of people thought, that could we finally see the small caps and the mid caps, which are underperforming thus far, pre-election, pre-Canada elections, tried to move back. That was the hope. Unfortunately, Friday put paid to the hopes, and today was confirmation of the fact that the selling out there at the broader end of the spectrum continues. The markets aren't reacting to too many good news globally, and that too. I mean, the China-US so-called trade war being called off, we didn't have an iota of a reaction in any of the commodities or the equity markets as well. So there's maybe some pain points. There's a bit of a correction that's happened already. So you don't know within the trading flow whether these kind of corrective moves would continue and whether we'll have the continuous pain points or no. But look at the broader markets, tells you a story. Some really good quality, high quality mid caps, whether they've come out with good numbers or bad numbers, have all come off in the last 15, 20, 25 odd sessions. There's clearly a lot of pain at the broader end of the spectrum. That probably tells you a story more than anything else. Autos, for example, and I'm sure you and Yatin have a better sense here, but look at the fall that has come into a bunch of these names. That tells you a story. Well, we're back to looking at an adverse advanced decline ratio as well. Neeraj, thanks for joining us and giving us a perspective. But what are the levels we supposed to keep an eye on when it comes to the benchmark indices? This is what our technical experts have to say. Listen in.
Till the time we don't see any smart pullback or recovery in the markets, it's better to avoid long positions and wait for fresh long positions. At present, those who have taken short positions, they can hold on the existing sell positions. And if there's a pullback or bounce back in Nifty of 30 to 40 points from present levels till 10,550 levels, then that should be used as a selling opportunity, with the stop loss to be placed at 10,600, 610 on higher side, for the downside target of 10,480, 10,450 levels. It seems that next 1 or 2 days, markets can show some pressure, and a recovery about 10,600, 10,610 levels will give a confirmation for the upside move. Till the time these levels are not taken away, it's better to be on sell side.
10,490 is one support level. I would absolutely not short anything now, though there could be some more downside. There aren't any reversals, so you're trying to catch a falling knife. I'd say the easy way out, sell the 10,200 puts, 10,800 calls. Neither look like coming. 10,800 seems far away. 10,2 doesn't look like coming without a bounce.
Well, there's lots more to talk about, but let's address the big changes in the Indian cement sector. Where we did have Ultratech Cement and Century Textiles in focus. We have Yatin Mota joining us to give us an update of the same. Yatin, How did it turn out for both these companies?
If you look at UltraTech Cement and Century Textiles, they essentially belong to the same Birla group. Now we had UltraTech and Century, both of the boards announced that Century will be selling their cement business to UltraTech. Of course, that happens at an overall consideration of little over 8,500 crores on an enterprise value basis. And if you look at the consideration, nearly 3,000 crores of debt goes off the balance sheet of Century Textiles, and nearly 5,500 crores. That is the valuation given, in terms of the equity swap. So, if you are a shareholder of Century Textiles and if you hold 8 shares of Century, you will be entitled to 1 share of UltraTech Cement. So, roughly, 5,500 crores comes in via the share swap deal, and the remainder 3,000 crores, which is the enterprise value calculation, that debt moves off the balance sheet for Century Textiles. Of course, the rationale for Century Textiles was to focus on the real estate business, the paper business, and also to deleverage the balance sheet, because we have a substantial amount of debt moving out of Century Textiles. And of course, UltraTech Cement, the key takeaway from the transaction was that they will be a 100 million tons per annum capacity company, third largest globally after the transaction is concluded. That is point number 1. Point number 2 is that the western, central and eastern markets wherein UltraTech has limited presence or presence could be strengthened further. So, that is the benefit that a company like UltraTech Cement gets. And also, more importantly, the profitability of Century plants, the cement plants is not as better as UltraTech. So probably over a period they could turn around the overall profitability by branding the business or probably getting into one roof. That is the kind of synergies UltraTech is expecting from Century Textiles. And if you look at the intraday graph of Century Textiles, and that is had seen a slump because market probably was anticipating a better valuation for the cement asset. However, with UltraTech, which gained on almost 3% in intraday trade, of course it cooled off from the day's high, but a positive deal according to brokerages for UltraTech. However, on the Century Textile front, it could be the case wherein investors probably expected much better in terms of the overall valuations for the cement business.
But Yatin, perhaps something more important for the markets is the fuel price hike. It's becoming quite grave now.
Yeah, and if you look at this chart, this is the petrol prices in Mumbai, and these are historical prices. And if you look at it, it has touched all-time high at around 84 rupees 40 paisa per liter. So if you look at the prices, it has clearly been on a roll. So we are at the highest level here in terms of the petrol prices, and clearly that is weighing onto the markets. Since crude is on the boil, in general, India being a big importer, they are facing issues in terms of the overall crude oil inflation, which is essentially being imported into the country. More importantly, it is pinching the pockets of the consumers, and also importantly, we had stocks like the auto sector. All of the stocks were down in trade. So, the auto sector also was slightly jittery along with the markets. Since the crude is on the boil, petrol prices have, come to a record high. And post the Karnataka election, we have seen a steady 15-20 paise hike coming in every day.
Right.
So, for the last 1 or 2 weeks, we are looking at a steady hike which has happened. So, from a level of 78, at the start of the year, around 80 rupees, we are now around 84 rupees on the petrol prices in Mumbai.
Right. Yatin, thanks for joining us and giving us those details. We'll continue to track the movements of, fuel prices. For now, steep at around 84.4. But that said, there was yet another stock which came up its earnings today, Colgate-Palmolive. It was a mixed set of earnings, because if you consider the top line, that was disappointing. But that was also largely because of the disappointing volumes growth. We were expecting double-digit volumes to come through. That is not the case. We saw just about 4% growth when it comes to the top line. However, on an operational basis, we've seen margins come in at around 28.2%, and this is ahead of the 26.5% estimates that they had when it comes to Bloomberg expectations. Consequently, we also saw the profit grow around 32% on a year-on-year basis, and that's the reason why we have seen a rather mixed set of numbers coming in. But with that, it's a wrap on the markets today. But don't go anywhere. Lots more lined up, so stay tuned in Bloomberg.